education through everyday conversation. Hey everybody, hey, how you doing? My name's Nate Talbot. I'm the Executive Director of the Detroit Blockchain Center, and this is the fabulous
Ashlee Rose. I am just your everyday average human being. I'm a mother and a reseller looking to learn what all this crypto Bitcoin business is.
Right. So what are we talking about today, Ashlee?
What is the difference between money and finance?
The difference between money and finance. Is there a difference between money and finance?
I think so. Let's see here. So money, as far as I know, is a tool that we use to exchange goods and services. A store of value.
Okay.
And then finance is a way to manipulate money to, make a gain, I guess, or get something done.
All right, so thanks for tuning in this week, and I guess we'll see y'all next week.
Wait, was I right?
I'd say that was a pretty good description myself.
Yeah.
Yeah, money versus finance. I think it was important we talked about it this week because in crypto, right now, still the primary driving force for a lot of it is like speculation, right? Mm-hmm. People are trading or using it as an investment or, doing other things. And of course, one of the core initial use cases for it was to use it as money, right? Mm-hmm. Use it as a way to exchange value natively on the internet. That was sort of the purpose, right? Because we had to use these old school rails before then, right? Where, I want to send you some money, I got to use something like PayPal, and so I send my money I send it from my bank to PayPal, which is just a different kind of bank. PayPal does all the banking stuff behind the scenes, and then it gets to you later on. And I think the analogy I like comparing that would be like, we all use email. Imagine if every time you sent an email, it went to the post office, they had to print it out, deliver it to wherever it was going, retype it back in, and then I would see the other end. It's like crazy, right?
Inefficient. Very
inefficient. Well, that's what we do right now still with online payments. If you want to send money someplace, right, you're going to use PayPal or Cash App or Venmo or one of these types of things, and you're literally rewriting an email. Yeah.
Needs an upgrade.
Right. So that's that's just sort of a mixture of money and finance and whatnot. The technical definition of money is it has to be I'm actually going to list it in the order of importance in my head. Okay. Which is first it has to be a store of value, then it has to be a medium of exchange, and then it has to be a unit of account. Okay. You get all those? What each of those mean?
Unit of account, meaning like the proof of work thing that you
Nope. Unit of account, which is, do you know what the price of Bitcoin is today?
Oh, God, no.
Give it a ballpark. What about?
Oh, my word. I knew it. So it went down, and then it came back up a little. Yeah. 15,000?
No, I don't think we took that deep a dive. But yeah, right now it's at 16,600.
Oh, okay.
16,600 what? Horseshoes. Dollars.
Okay.
So if you ask me how much Bitcoin's worth, I would say it's worth a Bitcoin.
Yeah.
Right?
Yeah.
But we're using the unit of account of dollars to price Bitcoin.
Okay.
That's unit of account. When you go to the store and you want to buy some eggs, they don't ask, you pay dollars. They price it in dollars. Yeah. It's a unit of account. Yeah. It's how we communicate the value.
Okay.
Right? Your monetary system shifts when they stop pricing it in one currency and they start pricing it in a different currency.
Okay.
Right?
Right.
This is when you hear people talk about the petrodollar. Right? One of the reasons the U.S. dollar has so much power across the globe is because they worked out the deal with OPEC that all oil needs to be bought and sold in dollars, priced in dollars. So when Germans go to buy oil, they don't pay with back before the euro. They didn't pay with the franc.
Okay.
Today they don't pay with the euro. They have to pay with dollars, which means all these countries have to buy or accumulate dollars, U.S. dollars, to do oil, and that's how the U.S. dollar ends up being the world's, money reserve. So yeah, you have unit account. It's just how you price things.
So, like when we make the switch, I don't know if I'm getting way ahead of myself, but like I'm gonna be hopeful here. When we make the switch to Bitcoin as the like unit of account, will it be priced in Satoshis?
Yeah.
Like,
that's how we do it. If Bitcoin was a Satoshi, right, the smallest unit of a Bitcoin you can have, right, 100 million Satoshis.
So then it would be more like, okay, one Bitcoin, like, so the price of Bitcoin wouldn't be 16,600. It would be, I don't know, like
one Bitcoin.
Well, but it would they break it down into like, okay, the price of one Bitcoin is like, I don't know, 2 million Satoshis or something like that?
Well, no, one Bitcoin will always be 100 million Satoshis.
Or, well, yeah, okay.
And one Satoshi will always be one Satoshi. It's like how much is a dollar worth?
So like, but one day so when we're looking at it and we're like, oh, what's the price of Bitcoin today? Like that will be a thing.
No, we won't even ask that question. You don't wake up today and say, what's the price of a dollar?
Yeah, good point.
So one day you'll wake up and say, what's the price of a dollar? And you'll be like, oh, $1 is 3 Satoshis.
There it is. Okay.
So now that would be the unit of account, right?
Got it.
And then, so I put them in that order, and we're going to get to the finance piece, I promise. But this is sort of important before you get into finance, because you were right. It's finance is the games you play with money, right? So I put them in the order I put them: store of value, medium of exchange, unit of account, because we've talked a little bit before about money being, so you just sort of brought it up, proof of work. Money is proof of work. I don't care what you're using as money.
Yeah.
Right? It's a system of debt. It shows that you've put some kind of energy into this, whether it's work or digging for gold. It was physical work to dig it out the ground, whatever. You put some work into it. You're not instantly trading. That whole barter system on a mass scale, again, has never really happened in real life, right?
Yeah.
Not at any society of scale. So it's like, how do we do barter? Well, it's a system of debt. I do some work, I get this receipt, we call that money, and then later on I use this receipt of stored energy to pay for housing, clothing, food, whatever. Now that's the medium of exchange piece, but if you're going to put all this work, if you come to work for me and I have you do a 8 to 12 hour shift of hard labor, right? We could use anything as that medium of exchange. I could give you, bananas.
Yeah.
But how long is that banana going to last?
Yeah, not very long.
So it doesn't have a very good store of value.
Right.
So to be a good medium of exchange on a long time scale, which is what you want, first it has to be a strong store of value, right? It's got to store that work, which is why I put store of value as the most important piece for money.
Yeah, that's interesting, actually, because then in that sense, wouldn't a dollar bill be kind of a terrible store of value because it can, like, catch on fire?
Well, yes, anything can happen to something. You could, go to the other extreme on a Bitcoin end or an Ethereum end or whatever, you could lose your tokens, right?
Yeah.
So they don't catch on fire because they're digital, but you could lose access to them if you don't have like good key management or whatever.
But I mean,
it doesn't. The idea is it doesn't naturally wither away. If you wanted to store, if you're having your dollars, and you think that's a good store of value. Dollars have different problems. But I can take a dollar, stuff it under my mattress, and then 300 years come back, and it's pretty much still there, right? It might have some deterioration, but it's still there. So it's done pretty well. And when you go to trade that, people recognize it as a dollar and probably still accept it, right? So it's a pretty good store of value in that end, the physical manifestation of it. The problem with the dollar is infinite inflation.
Yeah.
With fiat money, it's not so much the dollar that we say the dollar a lot. The dollar used to be backed by gold. When it was backed by gold, it had much stronger store of value qualities than it did once they came off the gold standard. And then it was just sort of based on the whim of the Federal Reserve and the Treasury,
Yeah.
right? And now they just print money up, so it loses its store of value.
Yeah.
So you have a good store of value. Once you have a good store of value, and this is why gold has made it 5,000 plus years as sort of the go-to store of value and monetary base, because it stores value. Gold's not going anywhere. Once you got it, it's not withering away. It's not rotting. It's not taking a different form. So it was a good store of value. Therefore, it became a good medium of exchange for the most part. It was really hard to coin and mint, but it was doable. It was malleable, so it was easier than other metals and stones and whatever. And then once people started doing that on a regular basis, it became a societal thing, and that's just how people started pricing it. They always use gold, or they always use seashells, so they just start pricing things in shells. Right? It's just sort of the natural evolution. So when you hear people debate about what is or isn't good money, and they're like, well, you can't even use it on a daily basis, a medium of exchange.
Yeah.
Well, if it doesn't have a good store of value, it's a crappy medium of exchange, right? Until it gets that store of value base. But that's money, right? So in a nutshell, that is money. We do so much more with money, though, right? You want to grow a society where everybody's not sort of hunter-gatherers and whatnot. You want to encourage people to specialize around something, right?
Yeah.
You naturally are a good organizer versus I might naturally be a good builder. So I don't want you to spend all your time building and me to spend my time organizing.
Yeah.
I want you to specialize in something. So that's sort of incentivizing sort of business growth.
Yeah.
Right? Specialization growth.
Efficiency.
Yeah, to do more efficiencies. But you got to pay for that. Because if all you do is organize and all I do is build, when are either of us grabbing food?
Yeah.
Right? So now I got to incentivize somebody else to eat and that, or to like manufacture food.
Yeah.
So now we're starting to talk about businesses popping up. And somebody wants to start a business, they need money to usually do that, right?
Yeah.
Because they're going to have to pay people to do the work, more people who are specializing.
Right.
Where does that money come from? You know what I mean? You can just sort of, I could go out as a builder and do the whole process, build something, charge somebody, have some money, then pay somebody to help me on the next roundabout, right?
Yeah.
That's one way to do it. That's how most startups even today work. Entrepreneurs, they're not really business owners, right? They're just self-employed.
Yeah. Right.
Right? That's because they sort of use money as just money.
Yeah.
But that's not a business owner. This isn't how people are really taking advantage and being efficient with their capital, with their money. So this is where finance comes in. How can I take basic money and start playing games with it to incentivize and align incentives and do more for more people? That is when you start thinking about like banking.
Yeah.
Right? Well, banks first were like just a place where you could store your money because you would put your money in and hold on to it. But a bank was like, this is a crappy business model.
Yeah.
Like you might charge them a little to hold your money for you, but they're like, there's not much I can do with it.
Yeah.
How about you come in, bring me $100? I'll keep most of your $100, but let me lend out $40 of your $100, right?
Yeah.
And then I can loan that out to somebody else and then charge them an interest rate. They pay me back the 40, which I'll give to you. They'll also pay me an extra, let's say 5% interest rate, right? 20% interest rate, whatever they want to charge. But let's say 5% interest rate. Out of that 5%, 4% is my profit, and then I'll share 1% with you because you let me borrow that money, right? That's finance. We've just done finance, right? Finance was born.
Yeah, yeah.
And that's grown to a point now where you have a bunch of different kind of finances. So within finance, again, you're talking about like lending, you're talking about stocks, bonds, futures, markets, derivatives, which is a big thing, especially for crypto. Yeah. You familiar with derivatives?
No, I was going to say there's a couple of those things I'm not sure what they are.
Okay, let's go through them.
Well, not derivative. I don't know derivatives, futures, something else you said too.
Stocks and bonds.
I know like what a stock is and a bond. Yeah.
Okay.
But we could touch on it.
Sure, right. Well, stocks are just equity into a organization, right? I start a company, I need to raise money, I'll break my company up into shares of it. All of those shares together equal 100% of my company, and I'll sell somebody an individual share of my company. You have a stock. They hold that stock, they get that much voting power. You know, whatever percentage of the stocks they hold, that's how much voting power they have in the company. You have bonds, which is how governments raise money. This is how governments used to raise money for wars. Before they could just massively print it out. And again, people think like the system we use now is the system we've always had. However, that's not so much true. Governments would have to raise money using bonds. They would basically say, look, let me borrow some money so I can pay soldiers and pay for bullets and all this
Buy
stuff.
bombs.
Yeah. I'll borrow the money. We are the government. You know, you obviously have to believe we're going to win this war.
Right.
And so once we win the war, we're going to have all these new assets because, you know, winner to the winner goes the spoils. So we'll pay you back and we'll give you this fixed interest. You know you're going to get your money back plus this interest rate. Right? That's just a bond. And that's how governments used to raise money. Besides tariffs and taxes, they would raise it through bonds.
Okay.
You have futures. Now, future is just this individual arrangement. So go back to I'll be a farmer and you have a marketplace.
Okay.
And I got a bunch of oranges. And you want to sell a bunch of oranges because you got the marketplace.
Right.
I don't want to sell the oranges. I just want to grow them and sell them in bulk.
Yeah.
Right? Every year we get together right at the beginning of orange growing season, and we both have to sort of take a gamble when we negotiate. Right? How much is an orange worth?
Yeah.
How much will a regular person buy an orange for? I'm going to set my price. You're going to see if you have enough for the price. And we can do that, but every year we're back to the table, and if I'm right and you're wrong on the market, then maybe I overprice. So I might say, well, I think each orange is worth a quarter.
Okay.
You're like, yeah, but people are willing to spend 50 cents. So I'll buy it for a quarter, I'll sell it for 50 cents, and you'll make a quarter profit. But what happens if the demand isn't there?
Yeah.
Right? Then all of a sudden people aren't willing to spend more than 30 cents or 25 cents.
Yeah.
You're breaking even. Or vice versa. I might undercharge, and I can't control the weather, right? The weather's horrible, so I can't grow the crops, which puts a higher demand on things. There's a whole lot of just market dynamics that can work. And it's a gamble for both of us that it both works out. So what a future is, when people hear about options tradings and things like that, these all sort of go back to futures. And a future is just a contract. So instead of us taking this gamble every year, we'll meet earlier, and basically I'll lock in a price with you well ahead of the season before we see sort of how things turn out. And say, look, I'll sell them to you for 20 cents. Right? It's a little bit cheaper than I want to sell them to you for.
Yeah.
But if things go bad and there's so many oranges and the oranges flood the market, at least I locked in the 20 cents. I'm not getting all the way bottom barreled at 10 or 15 cents.
Right.
And you can look at it the same way. You're like, well, I can get them for 20. I want to sell them for 50, but if there's some, again, a influx of oranges in the market or whatever, and the price drives down, at least you can get this lower price. So if you do got to sell them for the quarter, at least you're making that 5 cents instead of breaking even. So it's this negotiation thing. So we have this contract. It's a contract on a future price.
Okay.
So you'll see this in mostly commodities. I bring up oranges because I'm a big fan of trading, Eddie Murphy's Trading Places. And that whole movie was based around the futures contracts for oranges. That's the whole thing. So now when you ever watch it again, I get that.
I'll think about it differently.
No, I get it. And then options are just options to buy a futures contract. So we have this contract. You have this contract with me to buy oranges for 20 cents.
Right.
And person A over here, you don't know if you really want to sell the oranges. So you can give person A over here the option to buy this contract out. Right? It's just an option for them to buy the contract. And that way I would have to sell them the oranges instead of selling them to you.
Right. But in that sense, like that person who does the options, they would buy it for more than the 20 cents. So that way you still make a profit, or you just want, or it can be just even break even because you just want your money out.
Yeah, it could be a whole bunch of, maybe you got some early advice and you think you're not even going to be able to sell oranges for 20 cents. Mm-hmm. So you option it out for 19 cents because you think the market's going to hit like a 15 or 10 cent bottom. So you want to get at least most of your money out and give them the option to purchase the contract, and they got the other option. So like so when you talk about like futures and all this, if you're into Bitcoin and you've heard about like GBTC, which is the first Bitcoin contract, is futures. Okay. The SEC won't approve what they call a spot market ETF, where people can come in like a regular stock and just sort of buy Bitcoin, but you actually buy it. They do futures. They're like, we think the Bitcoin price will be this in the future, so here's the contract. And if you ever look at your, if you go to any chart and look at like GBTC, and I know if you're not a trader, you might not even know what this is really talking about.
Yeah, no,
beyond the scope. But if you ever hear GBTC, and I'm not sure what the call letters are for like ETH, but there's like ETH futures contract. All of these, that's what they're doing. They're betting on the future. What's the price going to be in 3 months, 6 months, 1 year? And this is where you'll see in like the Bitcoin price every like I think it's 3 months you'll see this like dip, or really 30 days you'll see this dip.
Yeah.
Because people are betting what the future price is, and if the price is going up, people really want those futures because they've locked in that price at achieve. They've locked the price in at 16,000, and the price is now 24.
Yeah.
So they can get $24,000 Bitcoin for 16,000.
Yeah.
But if the price of Bitcoin is going down, and it's like at 14,000, they're locked into this $16,000 price.
Yeah.
So anything they can get as close to 16, they might sell cheap, right?
Yeah.
So this is, again, those are all the games we play.
Is that considered like paper Bitcoin though?
Yeah.
Okay.
Most of it's paper Bitcoin, but
so isn't that kind of an issue?
So this
isn't it like against kind of what Bitcoin is supposed to be?
Yes.
Okay.
The other piece that you asked about was derivatives.
Right. Okay.
Paper Bitcoin, paper gold, paper anything is a perfect example of derivatives. They are derivatives. And if you're into DeFi, again, sort of why this whole conversation is important and how it relates to blockchain, crypto, the whole entire space in the first place is today almost everything is in crypto space. 99% of it is still speculative, right? Okay. We talk about the future of what things could be. There is some use case now. 4 or 5 years ago, it was 99.999% of everything was speculation, right? So we're trending in the right direction.
Yeah.
But yes, if you've ever done anything DeFi, you're talking about derivatives. All right, and that's why this is sort of important to understand, so you really get what's happening behind the scenes here. And the paper Bitcoin, I think we'll use as an example. But I'll even bring it back off of Bitcoin, and we'll go with paper gold.
Okay.
Right now, ballparking it, the price of gold, the total market cap of gold is somewhere near the, I think, $11 trillion mark.
Okay.
All right. If you take all the gold that's promised to people, it's $11 trillion.
Okay.
But if you take all the actual physical gold that's ever been dug out of the earth that people now have, from jewelry to everything, all the gold, it's only $9 trillion market cap.
The math is not mathing.
The math is not mathing. So where's this other like $2-3 trillion of gold coming from?
Yeah.
Paper gold.
Yeah, which would be derivatives,
Which is a derivative, right? So similar to like a bank, right? We go all the way back to our banking example. You put $100 in, I lend $40 out right? Let's say you have the only $100 in existence.
Yeah.
There is no other money.
Yeah.
You got it. You got it all.
Yeah, I'm the winner.
And you let me hold it.
Okay.
And I'm going to let somebody else borrow it because there is no other money and they want to start something.
Yeah.
So I'm going to let them borrow $40.
Okay.
What's the total amount of money in existence now?
200. Wait, how much was 140 and what did you say was the last one you said?
That was it.
Okay, so 140.
That's it. So we just took $100. That's all the money in existence. You had it all.
Yeah.
And we just turned it into $140. And then these people go out and make somehow more money.
Yeah.
Probably because I lent out more of your money, right?
Right.
And then they pay me back the $40 plus interest. Let's say they give me another $5 in interest. Now there's $145. I got $5. You got your $100 back.
Yeah.
They got their profit over
It
there.
keeps inflating and ballooning.
Right. This is how you end up with $11 trillion worth of gold with only $9 trillion of gold.
Yeah.
Now, this is how sort of capitalist markets work, right? We create money. We play finance. I have this debate with my Bitcoin friends all the time who are very hardcore into like Bitcoin is it. Like you were just saying, that's against it.
Yeah.
I'm like, I agree. I agree with that. However, do you want society to advance?
I was going to say, wouldn't it kind of make it stagnant?
Yeah.
Kinda
How
like
do
what
you
the-
grow a society with hard money? You can grow a society using strictly hard money and not playing a lot of finance games. Is how we've gone through most of history.
Without finance? Games?
Without advanced finance,
Okay.
you know what I mean? As long as you have banking, you have finance. But without the advanced finance stuff we see today, the stuff that got us into the 2008 recession, that was derivatives off of derivatives.
Right.
They were gambling and packaging and making derivatives from housing mortgages, which were derivatives, based off of bad debt loans, more derivatives.
Yeah.
It's just a game of derivatives.
Yeah. I mean, and I feel like that makes sense. I mean, if you're able to do it, why would you not? But that's kind of the problem.
But that's sort of the problem.
Yeah.
And so this is the conversation you would have, like, again, with like my Bitcoin or any of my hard money type friends is, like, are you saying get rid of finance? Like, would you rather see us right now, if we didn't have the advanced finance we do now, technology-wise, all the societal advances we have now, we would probably be closer to like the late 1800s, early 1900s.
For real?
I'm sure. Because how do you have big industry? You have the Industrial Revolution, which boomed everything up. How do you have an Industrial Revolution without advanced finance? How do you incentivize somebody? How do you do shipping?
Yeah.
This is where like corporations and stuff came from. How do I do shipping if I don't have insurance, which is another form of finance?
Yeah.
Derivatives with money.
Or like if you make something that's too expensive for the average person to buy, a fix for that would be to finance it for them so they can afford to buy
This is the whole lending thing, and this was huge. Again, we won't get too deep into it, but this is like during the world wars, both world wars, specifically World War One. Remember, bonds was how governments like to raise money, but you had religious barriers to lending. If you look at especially Islamic and Christian beliefs, biblically, if you're like a hardcore letter of the law type person, you can't do lending. Lending's a sin.
Oh, really?
Yeah, it's called usury.
Well, I mean, they're not wrong.
And then the Jewish religion, because remember, even Christianity and Islam, those are derivatives of, right? Judaism, they have an anti-usury law as well. The only difference between them is their law states you won't do it to your brother, and they consider your brother if you're part of our of our crew.
Yeah.
So if you're not part of our crew, we can lend to you. This is where like lending took off.
Yeah.
Right? Because now I couldn't lend out, but I could get it, and now this whole system took off, right? There's this huge history of it all. It's all where how we end up now. And you can not do any of that, but you end up really stagnating growth, societal growth.
Basically because, like, it takes money to make money kind of thing, right?
Yes. Takes money to make money, and you got to make money to take money.
Yeah. Wow.
And so when you're using DeFi, right, people know about, like, if you're Bitcoin, you're Bitcoin, and that's it. Mm-hmm. So, but there's Bitcoin on Ethereum and Avalanche and Solana and Cosmos and every other main chain. How do you get Bitcoin over there?
Wait, yeah, what is it?
I don't know if you've ever heard of wrapped Bitcoin.
I've heard of it, but I don't know what that means. I mean, it is Christmas season.
Wrapped Bitcoin is a derivative of Bitcoin. So what I do is I take my Bitcoin, I give it to some centralized entity. That's how pretty much all of it works right now. They say, okay, we're going to hold your Bitcoin, and then we're going to go over to Ethereum, and we're going to make an ERC-20 contract. And we're going to call it wrapped Bitcoin.
Okay.
And we're going to issue, if you give us one Bitcoin, we'll issue you one wrapped Bitcoin. And now, because you have this wrapped Bitcoin, this Bitcoin that's wrapped in an Ethereum contract, right? And it's not really wrapped, it's just an Ethereum contract.
Yeah.
Now you can take that wrapped Bitcoin and you can go to Uniswap and trade that Bitcoin for whatever other token you want.
So it kind of like unlocks the phone in a sense, like.
Sort of, except you sort of lose custody of your phone in the process.
Yeah, I was going to say, why would somebody want to do that? Why would
finance? You?
But because they're going to make more money off of it?
That's what they're hoping.
And how would they make more money off of it doing that?
Well, the same way. This is not new to crypto, right? This is how it's always gone. If you have gold, and I put my gold in a bank, and the bank gives me dollars.
Okay.
And that traditionally, pre-1970s, you theoretically were supposed to be able to bring your dollar back to the bank and they'll give you the gold. Right? Why would you do that? Because the paper money's easier to deal with. You have more opportunities in finance because you can trade, you can do stock. Maybe I can't buy a stock with gold. I can buy a stock with dollars. Like we just talked about with oil. I can't buy oil with gold, but I can buy oil with dollars. Right? So I can play all these games.
Okay.
Right? So it's the same thing. I can't get into DeFi and do these high yield games and, play the whole crypto casino stuff if
like in Bitcoin.
If I just have Bitcoin, because Bitcoin doesn't work in these other systems. Bitcoin is Bitcoin.
Yeah.
So I need to wrap it. And so now Ethereum has taken off, largely in part because of DeFi, largely based off of two derivatives, Bitcoin that they wrapped up, and stable coins, specifically stable coins like Tether and USDC,
so
which are derivatives of
the U.S. dollar?
Of the U.S. dollar. You put in $1, I'll give you this token. You bring me back this token, I'll give you $1. Yeah.
So basically, this could be a bold statement, but is Ethereum riding the coattails of the U.S. dollar and Bitcoin? Because they're like, hey, bring us the good stuff and we'll give you this packaged up nonsense.
Hardcore Ethereans would say absolutely not.
Yeah.
Ethereum is sound money, and that's all we need. But yes, I would say your argument holds weight. So Ethereum rides off the derivative coattails of Bitcoin and the U.S. dollar. But that's not like where I would say there's debate to be had there is that a bad thing?
Yeah.
And then B, if it is a bad thing, it's definitely not bottom of the barrel, because what do you have to do on every other network?
What do you mean? I don't know. What do you mean?
If you're on Avalanche or Cosmos or Solana.
KYC? No.
They're all using wrapped Ethereum. They're using wrapped Bitcoin.
Oh, so now we're getting into
these are like all your bridges and stuff. If you want to go from Ethereum over to Avalanche,
a derivative of a derivative of a derivative. Oh.
Right. I want to take my Bitcoin and use it on Avalanche. There isn't a direct bridge. Well, I think they just started one, but there's not really a direct bridge from, let's say, a Bitcoin to Avalanche.
Yeah.
And I think they just might have created one, but either way, I had to go from Bitcoin. I had to give it to a custodian. They would wrap it up and give me wrapped Bitcoin so I could work on Ethereum. Ethereum transaction fees are way too high, so I have to take my wrapped Bitcoin, wrap that up, and put it up on a layer 2.
Is that like what the MetaMask thing does, or
No.
one of those?
These are your bridges.
The bridge. Yeah.
These are all your bridges do.
Yeah.
Now I wrap it up and put it on a layer 2. So now I'm on Polygon or something, which is a layer 2 of Ethereum, and you can check out our layer 2 and sidechain if you don't get those episode. But then I'm going from my layer 2 on Ethereum, and I'm porting it I'm wrapping it again over to Avalanche.
Man, that's like holding everything up with duct tape, huh?
It is. Vitalik actually brought up he's become a sound proponent against bridges, and he's got valid points here, which is now what happens. Remember, where's that Bitcoin at? You have it. You're the custodian.
Yeah.
What happens when you squander, you FTX the the Bitcoin away? Now what?
It's gone. It's gone.
It's gone, but look at all the value that's secured on top of that. What happened to that wrapped Bitcoin that's on Avalanche now that was dependent on that hardcore Bitcoin you had?
Falls too?
Yeah, because the Polygon Bitcoin that's based off of falls, the Ethereum Bitcoin that's based off of fails.
Like a house of cards or like dominoes or something.
Right. But on the Avalanche, you took that Bitcoin and you borrowed $16,000 of stable coins. Then you took those stable coins and went and got real US dollars. Like there's a lot of people in the middle who get screwed over through this whole process. It's a very dangerous and tricky game to play, but this is finance.
Yeah.
And when you start financing finance, and then you finance the finance on the finance, and when you hear people talk about it's really, really a casino, that's why. And, again, like I find myself, this probably comes out very anti-DeFi and everything, but I'm like a huge proponent of DeFi.
Yeah.
But I also find myself having internal debates all the time on, all right, where do you draw the line?
Yeah, that's what I was just thinking in my head. Like, it seems like it could be good, but also, like, some of that crazy derivative on derivative nonsense can be really bad.
This is where, like, in the off-chain world, right?
Okay.
This is where regulations come into play.
Off-chain being, like, banking?
Yeah,
like
traditional finance.
Legacy. Okay.
Yep, this is where regulations come into play. It's like, all right, we sort of need this to a certain extent, this finance games, because we want to advance society quicker. But you have to put some rules in place.
Yeah, we have to protect ourselves from ourselves.
Now, they do a really crappy job of this, but if I was to ever be a pro-regulation type, it would be for those types of reasons. And so the issue I end up having is, in like DeFi, is like the nature of an open permissionless blockchain is there are no regular. If it's not encoded in my view of it all, if it's not encoded into the base layer, if it's not part of the actual code, then it's not it's not censorship resistant. It's not permissionless.
Yeah.
There's somebody in there that can interfere. And that's what we're trying to get rid of. That was the whole point of doing any of this. When you built Bitcoin, when you built Ethereum, when you theoretically, when you built any of them, a lot of them are just money grabs, right? But theoretically, when you build any of them, the point is how do you take people out of the system and then add them back into the system? How do you stop people manipulating money?
Yeah, but still,
and then introduce a new system where people manipulate money.
So what would the fix be for that? For Bitcoin to still like maintain the integrity of like its existence and also still be able to progress.
Yeah.
As a society, because like you need money to make money. You have to. It seems like you would have to loan some money out, but then also seems like there has to be some set of rules, but not like too crazy, but not too not crazy.
Yeah.
Like too lenient.
Exactly. An advantage, how I can stay positive about DeFi, and, you know, again, when I say this now in 2022 going into 2023, you know, I'm like, no, DeFi is like a huge thing. It's the next step of freedom. You know, you have to have sound money. That's sort of the Bitcoin narrative. You have to be able to use that money, though, beyond just direct payments, and that's the DeFi part. And they're like, well, you know, right now there is no such thing as DeFi. And I agree, there is no such thing as DeFi right now. The more appropriate term from what we've been doing over the past few years in this space is what's been sort of called open finance. Because if it's really happening on a chain that's public, at least you can see it, right? I can audit what's happening. The reason there's one version of wrapped Bitcoin. So you have wrapped Bitcoin. Okay. Then you have another version, a whole different wrapping process, a whole different derivative system from Bitcoin called RenBTC. Well, they got caught up in this whole FTX Alameda fuckery. They are shutting down, and think about how a decentralized system shuts something down, right? But they are shutting down their Ren wrapped Bitcoin, their first version of it. So if you a year ago or 2 years ago did that process, you wrapped some Bitcoin using the Ren bridge, and then went through these other systems.
And now they're shutting it
You
down.
can't go back, because on December 20th, so today is what, the 18th, in 2 days from now, they are shutting down that contract. And if you haven't reversed your transaction by then, it's done. And that's hoping you can reverse it, because, again, you're trusting a custodian in the middle.
Yeah.
So if you're the last one to trade backwards, maybe you can't. Maybe the liquidity isn't there. Maybe they spent that Bitcoin. How do you get it out?
Yeah, like a run on the bank type thing.
Yeah. I think we have a caller coming in. So let's take that.
Go ahead.
Hello.
Hello. How
Hello.
you doing?
I'm good, Nate. How about yourself?
I'm doing good. Who are we talking to?
This is Lawrence Jackson, man. You guys put a hell of a show on last Monday, man, at the Nest in Romulus, man, in terms of helping people to understand Bitcoin and blockchain and all of that. And this is an even more interesting conversation, because you're talking about my favorite stuff, man, money and finance.
All right.
So I wanted to ask a question about DeFi. I'm trying to remember what you told me that really is. And then how do I say this? I'm looking at trying to figure out how to create an economy. You know, all of our smaller businesses in the Detroit area, they really need a new economy, a new way of doing business with one another. I might be a little ahead of some things, but if you could talk about those two issues, man, I would truly appreciate it. And I will hang up and listen, man. But I really appreciate you putting me onto your podcast and all your information. Appreciate you.
Oh, man, I appreciate you. Thank you.
Thank you.
Thank you.
All right.
All right.
Bye-bye.
So we had reviewing again what DeFi is, and then local business. I think I can summarize all that up. Okay. So again, DeFi, we talked about like traditional finance. Again, you put your money in a bank. We talked about even the wrapped Bitcoin thing, right? Yeah. I'm going to give the problem with all these is I have to trust the centralized entity someplace, right? I have to trust like this RenBTC thing we were just talking about. We had to trust, if you're going to use that, you had to trust that the organizers behind Ren
weren't going
to close it on you. And if you're not paying attention every day, like there's going to be thousands, if not hundreds of thousands of people who will get screwed by this whole RenBTC thing. So DeFi, true DeFi would be, how do you do this process without the need of a centralized trust?
Right.
I talked about building into a base layer.
Yeah.
That could be, we need something, maybe if Bitcoin is going to be your derivative, right? You have to sort of build it right on Bitcoin, right? And so there's always this open verification process. There isn't
like
a
another
centralized,
layer?
like another layer, or that we're closer to seeing something like that on Ethereum. If you took something originally, like there's a project called DAI from MakerDAO, right? DAI is a stable coin, but instead of being backed by a dollar, right, they take Ethereum and they use this over collateralization, more finance, right? So if Ethereum was worth $1,000,
Okay.
and I want to borrow $500, right?
Okay.
How DAI works is I take my $1,000 of Ethereum,
Yeah.
I put it into this smart contract,
Okay.
and if it's a truly permissionless, decentralized smart contract, nobody can interfere with that smart contract.
Okay.
Now it's just code, no people.
Right.
And so I put my $1,000 in, and that smart contract generates out 50% of that in a stable coin. It'll give me $500 of this dollar valued stable coin called DAI. So for $1,000, I put it in, I get $500 out.
Okay.
Right, so I've just borrowed money against against myself.
Okay. Yeah. Okay.
Right, I've created money, but not out of thin air.
Yeah. This is
Theoretically.
a question I was going to ask you.
So first you have to have a belief that Ethereum by itself has some fundamental intrinsic value in and of itself.
Right.
Right. So you're not just printing money out of thin air.
Right.
As soon as I pay that smart contract back, the $500 or the $500 plus whatever interest that was already laid out in the smart contract, once I pay that back, it releases my $1,000 worth of Ethereum.
Okay.
So now I've just done lending, right? With no centralized entity.
Right.
Anybody can interact with this smart contract. It's censorship resistant because it's on the Ethereum network, which is, a decentralized system. You have all this finance you can start building from there and never have to trust a centralized entity like a bank or a lender or a loan shark. Right?
Okay.
So that's first. Now, when you talk about how do you apply any of this stuff to like businesses, which I'm a huge proponent of. I like globalization. I like the fact that the world's sort of getting smaller in some realms, but we still geographically live in neighborhoods.
Yeah.
And value extraction is a real thing, especially in certain communities like Detroit, where it's really easy for a company to come into Detroit. And I'm going to say Walmart is a great example of this nationwide.
Okay.
All right. You have all these small local businesses, a small little grocery store, a small little hardware shop,
Like mom and pop shops.
little mom and pop shops all over the place, right? They live in your neighborhood. They pay local taxes.
Right.
Their kids go to the local schools. They have an incentive to see your geographical neighborhood thrive because they live there, right? And then they work there. So they also want to see you do well so you can come spend money with them so they can do well as well. There's all these aligned incentives. Walmart comes in with cheaper prices because they get all this stuff sourced from China, all this. They drive these mom and pop shops out. But where's the money going? When you go spend $100 at Walmart, that's going back to Walmart headquarters, which is going to the Walmart investors and the Walton family and all these people. And now you're extracting every time you shop at Walmart. It's affordable, but for people, which is important, but at what cost? Yeah. You're actually, it's I can't remember who said it. There's this tale, I'll give like the 30-second version, basically of these Alaskan hunters, how they would catch a wolf, right? What they do is they stick the blade, they melt the ice, they stick the handle of a blade in there, and they pour just a little bit of blood on it. And then a wolf comes by, smells the blood, and starts licking the blood. And like tastes more blood. And so it keeps eating. But of course, he's basically eating himself.
Oh my God.
Right? He thinks he has this leg up, but he's killing himself in the process. Well, this is us, right? This is how open capitalism sort of led us.
Oh my God.
Right? Where I only have $100. I want to go to the mom and pop shop, but they charge a little too much. I can get it for half price at Walmart. I'm gonna go to Walmart. Now Walmart's sucking the economy dry, and I wonder why the tax base dries up. And, when we talk about taxes, at least myself, you talk about like federal taxes. Well, the federal government can print money. Taxes are just a way for them to control. When you talk about your local government, your state governments, they can't print money. The federal government made sure they couldn't print money. So they need taxes if you want, any kind of public good. That's what your taxes go for. They can't just print money, and you're sucking that tax value out for any public goods. You're sucking the private equity money out because you're killing the mom and pop shops. You're killing your community by shopping at this. So local business can use crypto and Bitcoin and hard money and derivatives, DeFi. They can start using these things to incentivize. I'll just give it quick because I know we're sort of running short on time. A quick little example of what you could do as a local business group if you had like a business organization. You set up, and instead of setting up a traditional, I think it's a Series A like stock, you do the I can't remember the name of them all right now. It's like a Series A plus or something that allows you to do non-accredited investors, right? But you tokenize this as you run it through a DeFi system. And now you have your little business strip neighborhood, right? Maybe it's 3 blocks of local businesses.
Okay.
And what you do is, as an organization, you equitize some, and then you incentivize local shoppers through the use of like NFTs and other DeFi resources, things like that. You incentivize people within the neighborhood, a driving distance, to come shop at your stores. And for that, they get equity in your stores, right? They have an ownership piece. As your store does well, basically their stock goes up, right? Localized stocks.
So kind of what you're saying is each store could kind of make their own token, which would be as equity in the store. And as you shop, you get these tokens, which are almost like reward. Would they be reward points, kind of?
Yeah, because you wouldn't be you're not printing your own token like I'm not going to make my own Bitcoin. You're making really these NFTs.
I see. Okay, that's where the NFT came in. Okay.
Right? That's where the NFT piece comes in.
And so then what can you do with these NFTs?
That's up to the creative. That's the business creative. There's a lot of things you can do that's beyond the scope of this. Yeah. But just as sort of like a brain teaser on that, you could do this, and now as your businesses grow, the neighborhood, who also most likely, if you have a community that has local businesses, it's probably because nobody values your neighborhood very high these days. Or there'd be a Walmart or a Kroger's or a Starbucks or Whole Foods.
Yeah.
They're going to go into what they consider high value neighborhoods. So if you have a bunch of local businesses, it's probably because you don't have these other factors driving you out, which means they're undervaluing your local area. But there's money there, and instead of these people driving out to the suburbs or the closest main chain store, they can just shop locally, and you both benefit, right? It's all about, at the end of the day, all of this is about aligning incentives.
Yeah.
And as you align incentives,
I always end up writing that down every episode.
you can all grow.
Yeah, move together.
Yep. So in a nutshell, that's sort of money versus finance. I would usually ask you, do you have a different definition? Do you have a different definition of what the difference is?
Not really.
It's because you nailed it pretty head on in the beginning.
Yeah.
So yeah, money versus finance. Definitely do some deeper dives. Look for, if we don't already have, we'll have the, if you go to theblockument.com, right, we have our archive of shows plus resources for each show. So today I will have, when you go to theblockument.com, in a couple days, we will have resource links to where you can find more information about this stuff, learn more, get more in-depth information. Additionally, you can always reach out to us. We're on Twitter, TikTok, Facebook. All of them are at The Blockument. Yep. I'm only pretty much on Twitter. But reach out to us there, ask more questions. We'll either address it right there. Maybe we'll make it a show topic. And then when we do, like today, just call on in, ask us questions live.
Don't be shy.
Don't be shy. And, keep on cryptoing. And remember, come for the riches,
Yeah.
stay for the revolution. Talk soon.